Today we're going to focus on why US jobs data is stirring fresh economic doubts. On Friday, we saw the latest jobs report from the US for the month of August. Now, this often gets investors' attention because it really influences how the US central bank are thinking about interest rates in the future. This month was of particular interest because last month we saw Donald Trump, the US president, actually fire the commissioner who's responsible for publishing this report after it was much weaker than expected. This time round on Friday, we saw actually the jobs data again weaker than expected. Only 22,000 jobs added for the month of August. This was less than the 78,000 that economists had been expecting. I suppose for context, if we look at last year, the monthly reading averaged 175,000. So we are at a much lower rate, which is somewhat concerning. It is challenging investors' expectations of the health of the US economy and does somewhat agree with market expectations that interest rate cuts are needed in the coming weeks. If we look at the reports, where we're seeing strength continues to be within the likes of healthcare, leisure, hospitality, but where we're seeing weakness is in goods producers as well as business services. When we look at the unemployment rate, that ticks marginally higher from 4.2% up to 4.3%. Still quite healthy though, but we are seeing notable weakness in the age range of 20 to 24-year-olds. So college graduates are actually finding it increasingly difficult to find a job. Now, part of the issue are Trump's policies. He's limiting immigration and is increasing deportations. Also have an effect is the developments in AI. So AI is being increasingly used and rolled out across different businesses, and that's limiting the need for workers, particularly part-time workers. This week, investors' attention will be back to inflation. On Thursday, we'll get the main US inflation report of CPI. Expectations are for inflation to creep higher again from 2.7% up to 2.9%. Any reading materially higher than that would really challenge the market's expectations of lower interest rates despite the weakness that we've seen in the labour markets. Elsewhere, we'll also hear from the European Central Bank. They'll be deciding whether to change interest rates. Expectations are that they won't need to change interest rates given the health of the economy and where inflation is sitting today. That's all from us today. Thank you for watching, and we'll see you next time.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.